Hi, everyone. I'm James Garbutt.
And I'm Denny Dumas.
And this is the Garbutt Dumas Real Estate Podcast.
This is your world, James.
Goods and services tax. Today we're talking about GST and real estate. And I think we're coming to this conversation because we've run into a few questionable, does GST apply, does it not apply, and the frustrations around finding the answer to that in the past. Yeah. So we thought we'd do a quick little episode because if you run into this, you're going to search GST, whether it's buying land or buying a new house in BC. And there's going to be these rare instances where it's in that gray zone where you don't know if it applies or not. Like if you're buying new construction from Concord Pacific or one of the big developers and you're buying a new condo, you're paying GST.
Yeah.
Let's just get that out of the way. And if you're buying a house on Burke Mountain that's new, you're paying GST. We're talking about the in-betweeners, the significantly renovated homes. At what point do you pay GST and at what point don't you? And what things do you need to consider for that? And how do you get closure on that? And then the other thing that would come to mind is land. Land is one of those items where GST may or may not apply. And in the past, I've had difficulty getting closure on that as well. And so, we're not accountants. Don't hold us to any of the stuff that we're going to talk about. This is an agent's perspective on how to take a practical approach at approaching this stuff. But everything that we talk about in GST and tax needs to be outside validated. Don't say this episode's holding weight. Yeah. So let's just be clear on that.
Well, I think the majority of our position is going to be that there's a lot of area that depends, right? The answer is depends. Like in new construction, sometimes the second owner can have to pay GST, and it depends on the intent of the first owner. So like there's a lot of gray area here. There's a lot of like what if questions that need to be asked after this GST question. So I don't think the purpose of this is not to make concrete statements. It's just to shed some light on how many different scenarios there are, and that it's real difficult to get a concrete answer with GST. Like even speaking with accountants, they're going to ask a lot of questions back to you, and you're going to be super confused, and probably more confused than you were going into the meeting about GST. So I think that really just is the point of the podcast, is to share that it's a weird little area of real estate.
Yeah. Well, how about let's talk about some scenarios, because you ran into one recently, or Monica on our team ran into one. Yeah. And hers was particularly regarding a significantly renovated home. So the significantly renovated home, and in her particular case, it was more of a cosmetically renovated home as opposed to a significantly renovated home. Yeah. But two different bodies classified it differently. And I think the CRA not having all the information and the rep that she talked to on the phone or her clients talked on the phone led them to believe that it was GST applied. It was significantly renovated. And the BC Housing Authority, or whoever, I guess, was it for the warranty part of it, potentially?
Yeah.
That deemed that it wasn't a significantly renovated home. And I don't think there was a warranty part of it. That's part of the reason why. Exactly. So, but typically you go to the CRA for peace of mind on this stuff, and you have to recognize that the person on the other end is likely not a real estate specialist. And I believe, correct me if I'm wrong, but I believe a significantly renovated home they deem it like 75% or more renovated.
Yeah.
And
there is a checklist of criteria though, like extensions or adding space, digging out a basement or whatever it is. There definitely is like criteria that I don't have off the top of my head, but it's not just like, did you update 75% of this home? It's like, are you adding square footage? Are you changing exterior? Are you, a lot of things.
I believe I read a document on it years ago that tried to formulate that, like what qualifies for a significantly renovated home. And it's real difficult because every house is different and every extension is different. Yeah. I mean, as a real simple thing is if it's a cosmetic reno and you're not moving walls and doing extensions, it shouldn't apply in most scenarios. I mean, it would be a very rare scenario where someone's putting absolutely elegant Italian marble in a dump of a house to really justify that cosmetic reno to be 75% of the value, if that's even how they look at it. But even then, that wouldn't make sense. So usually the trigger point for me is once there's an extension, or if it's an inside-outside full reno, and it's being sold by someone that's in the business, a builder. That builder, if the owner is in the business of buying and selling, and if the house is significantly renovated inside and out, or there's or an extension, those are the sort of trigger points where I would want to know, is this going to apply to GST?
Yeah.
And if it's someone that's not a builder, not in the business of flipping homes and selling for a living, and they've just done a real nice interior renovation, I wouldn't be concerned about it. But that being said, there might be rare instances out there where something's backfired on someone and paying GST.
Yeah.
I don't feel that. Okay, so I guess speaking on the GST, the clause that we put on it is the buyer is obligated to pay the GST. That's typically how it's dealt with, and I think that's a good thing. And I want to bring this up because if you don't write that contract correctly, where the buyer is obligated to pay the GST if there is GST due, and you write it in a way that the seller is obligated to pay GST. Well, if this happens to be one of those instances where it's a significantly renovated home that's in that gray area, a seller's going to be inclined to be more proactive and cautious. And so they're going to likely just proactively claim GST whether it applies or not, because they don't want to have it come back to them down the road. Mm-hmm. Whereas a buyer, once you have that accepted offer and you look at the scope of renovations, you might deem that it is, after you get all the information, you might deem that this is not a significant renovation, and you might deem just not to claim it, and then wait to see if it comes back to you down the road. I guess that would be the ask for forgiveness approach. So, but at the end of the day, if that GST clause, I would suggest that if it is part of the negotiation, the buyer to pay it often is better than the seller to pay it if you're negotiating on the net price. Because if the GST, if it's one of those areas where GST may or may not apply, I think the buyer is going to be less inclined to pay that GST, whereas the seller is going to pay it no matter what because they don't want it coming back to them.
Yeah,
that makes sense.
Yep.
Yeah. Buying land too. Developers, spec builders, people that are buying land to sell. If you're a builder and you're buying a lot and you're building a house and selling that house on it, it doesn't matter if there's GST on that lot or not because it's all flowing through anyway and it's all being credited back at the end. But if you're an end user and you buy a lot and you build a home and you live in it and you're not intending to sell it, that's where the GST hurts you because the GST just increased your lot value if it applies. So, a very common, let's look at, say, Burke Mountain. You buy a lot in a subdivision up there and you're going to build your family dream home. Well, that's an instance where that would be a builder or someone in the business of subdividing lots, selling for profit, and GST would apply, likely apply. But if you're, say, in Queen's Park, New Westminster, and one of these 100-year-old homes is either sitting on two lots or has a sliver on one of the sides where they can subdivide off a section, and it's a regular homeowner, not someone in the business of building, that's a scenario where I don't believe GST applies. I mean, this is where you want to get it double checked. But in the past, when I purchased a home years and years ago where the owner sectioned off part of the lot, and we didn't know if GST applied or not. So we decided it was on me, the buyer, to figure that out and pay it if it was obligated. But in the research, it was one, hard to get a straight answer. Yeah. It's hard to get someone to commit to it. Yeah. And if you call CRA the source, that's a dangerous move right to begin with. So usually you're trying to get answers right from accountants that are, experienced with it, but they don't know often. They're not seeing the product. And maybe land's one of those things where it'd be nice to have some person that knows. Yeah. But the significant reno one's a little bit more challenging. We've just struggled to get straight answers. Yeah. And when there's straight answers, I think when you can't get the straight answer, you have to decide if you want the seller proactively paying that GST, or you as the buyer, you want to proactively pay that GST, or if it's in that gray zone, if you want to, do more research or ask for forgiveness.
Yeah. Yeah. And as a realtor in these situations, yes, we want to, of course, help clients get the answers, but it's not our job to determine and give tax advice, right? So whenever there's something outside of our scope, whether it's legal advice or tax advice with GST, for these types of situations, always recommend they chat with their accountant who is an expert in this type of field. The other, you briefly mentioned it with new construction. there's a lot of gray area on like the resale of new construction, and we've had this case a couple times that I still don't know the exact answer. Like I have a pretty good idea and can explain it fairly well, but in terms of whether it is 100% applicable or not, is everyone gives you a different answer. Even accountants give you different answers, but it comes down to intent for new construction. So if you purchase from a developer, you're paying GST. If you planned to flip that condo as soon as it completes, so it completes, you pay GST, you don't move in, and you sell it with the intent of profiting, and that's the reason that you purchased this new construction 3 years ago or however long, GST likely is going to apply again.
Doubled up.
Right. So if you're an agent representing, well, on both ends of the spectrum, you need to be careful on how you represent things. But if you are listing a new construction place, a lot of realtors will put in the comments, GST paid or no GST applicable, because it's the second owner. So from a realtor perspective, be careful on how you're advertising GST. That is not necessarily true if your client's intent was to purchase it for profit. And from a buyer's agent's perspective, make sure you are suggesting that your client that is purchasing new construction that just completed, that no one's moved into, make sure you're recommending that they talk to their accountant, and you're putting some sort of GST clause in your contract to protect buyers. Because that is another scenario where it could come back to the buyer.
Yeah. A great way to alleviate that if you are a new condo investor is just put a tenant in there for a couple of years. That would mitigate it, I assume. I mean, it has in the past.
Yeah, I believe so. I believe, because then you can claim that your intent was to purchase it as an investment property. As income, whatever.
And they say the 1 year rule, but I mean, if you do that 1 year rule 10 times in a row, the CRA is going to come down on you. So, sometimes having it for 2 years is a little more safe. And then, Denny, I don't know if you're familiar, GST in terms of an assignment sale where there's a lift. Say the purchase price, the original buyer bought it for $499 and assigns it for an extra $100,000. The GST, are you familiar if it's on the lift as well?
So again, it comes down to intent. This is the way that I've been explained it from real estate lawyers and people that are accountants and experts in this space, is that it depends on the intent. Yeah. So if James Garbutt buys a condo in 2015, new construction that is going to be complete in 4 years, in a year and a half, the market goes up and he assigns it, is GST applicable on the lift as well for the purchaser? That question comes down to intent. So was James Garbutt's intent purchasing this property to move in, for it to be his primary residence? And the way I've been explained it is, let's say, James is a teacher. He teaches in Burnaby. He's planning to live in this condo that he bought in Burnaby. This is going to be his primary residence. He gets a job opportunity out of town in that construction period. He moves out of town to take this job opportunity, and as a result is not going to complete on the new construction. So he assigns it. Then I've been explained that because your intent was to use it as primary residence, GST on the lift is not applicable. Whereas if you're, again, like in a real estate investor and you're purchasing it to profit or to sell down the road and you're selling for a lift, GST on the lift is applicable.
I think that's good info. So our intent with this episode is really just to share a lot of our conversations we're having to hopefully add some things to think about and value. But at the end of the day, it would be great to have a rock star accountant that understands this stuff if it is going to apply to you. But don't expect an accountant to know what a significant renovation is unless they focus on that.
Yeah. I think it's just important to understand that there's so many different scenarios, and every scenario is going to be a little bit different unless it's a typical one like purchasing new construction from a developer. There is a lot of follow-up questions. So I think from an agent perspective, recommend people talk to experts in tax.
Yeah. And just a reminder, GST is 5% in the price points that we're talking about. There's no PST in real estate, and there is a property transfer tax that's completely different. And that's a one-time thing when you buy. I think that's good for GST, Denny.
Are you as confused as I am?
I'm still confused. Yeah, I'm still.